Hi everyone, welcome back to the SCHD channel. My name is Ivan. I want to speak about why I didn't receive as much dividend as I should have gotten with the SCHD ETF. When I first started a few months ago, I was very excited of getting those dividends. Everyone loves getting paid. I mean, who doesn't want to get paid, right? And I was very emotional and excited about getting paid those beautiful dividends from SCHD. Along the way, I did notice that I didn't have growth stocks like Apple, Microsoft, Nvidia, all these growth stocks, all these tech stocks. I've been thinking, should I get into an ETF that does have, like a dividend ETF that does have Apple, Microsoft, etc. I was thinking of getting DGRO, which has Apple, Microsoft, etc. I already own a dividend ETF. So why getting into another ETF of dividends? Let me do some research, and I decided to go with the S&P 500, which already has all these great stocks that we use every day, like Tesla, Nvidia is stronger than ever. I was like, okay, let me just start buying the S&P 500, and I've been buying it. Before Jerome Powell came out, it was like a 90%, 89% that he was gonna keep interest the way it is. And I was like, he's gonna keep interest high. Definitely the stock market is gonna go down because that's his whole agenda. He wants to crash, not intentionally, but that's the whole point. If he increases or he keeps the interest the way it is, people are gonna go to where their money is safer. So people are gonna go to where their money is safe. Wouldn't you invest in in a fund or a CD, 5% interest? The volatility of the market, like your money technically kind of safe in there. You if you had a lot of money, I would go through that route. But I'm investing. A few days ago, SHD went up to like 74, 30, 40, a share. So I decided to sell 100 shares. If I sell now these 100 shares, then I'm gonna get around the same amount of money that I would receive on dividends. If I'm wrong, then if nothing happens in the market and the stocks goes higher, then I'm wrong. But it's 90%, about 90% that he's gonna keep interest the way it is. So I sold 100 share. I didn't sell on the loss. I didn't lose a penny on those 100 shares. I sold it at a profit, about like 50, $55, profit. I sold it and I left my money in there in Robinhood where it's accumulating, like about 5% interest, and I've been reinvesting that money into the S&P 500. Now, all that being said, I truly believe that I made the right move. Some people are gonna probably hate me for this because my channel is called SHD, and I'm not selling the entire SHD investment that I have. I just sold 100 shares. I'm still buying every day. I'm accumulating about 1 share per week, and the rest of the money that I was reinvest, like the total amount that I was putting into SHD, I diverted a portion of it into the S&P 500. I have a video coming up of which S&P 500 I decided to go with. And it's not Vanguard for now, though. It's not Vanguard. I'm pretty excited. Whoever tells me, "Oh, you're doing the wrong thing because you are investing in the S&P 500," if you think that way, you're not an investor. Because history has shown that the S&P 500, it's a beast. You cannot play with the S&P 500. And yes, some people might say, "Oh, I have like a total, like a growth, like an aggressive growth ETF." Yes, but it has a higher beta. That is too volatile for me. If you're younger, yes, you should go with growth, pure growth. But at my age, I believe that I couldn't handle, if there's like a crash in this, they and when it's a crash, they get hit hard. So I'm not willing to put up with that. I'm willing to put up with, with the S&P 500. There's a crash. So if you think I made the wrong choice, then like, hey, why this guy is going with the S&P 500? Then you're not an investor. You're not an investor. And remember, guys, all these stocks that are in SHD, they're also in the S&P 500. It's like I already have them in the S&P 500, but I just have them more aggressively within the SHD ETF. So I like the criteria that SHD provides. Stock, hey, if you're not paying dividends for 10 years, if you're not raising them for 10 years, if you're not doing this, you're not doing that, then you are not getting into the club, into the SHD club. So the S&P 500 is more broad. You are not really choosing the losers. You are choosing over time the winners. Because Apple's not going to be the number one, stock in the S&P 500. You know that over time that will change. When that will be, no one has a crystal ball. No one does. So because if a person did know or knows what's going to happen in the market, they'll be far, far more richer than most, true investors like Warren Buffett. But this is the reason why I got less dividends this time around, because I made a decision. I made a conscious decision, to divert, part of my money into the S&P 500. So this time around, I got paid 67.81, and it's okay. I'm happy. It's gonna buy me almost a portion of SHD, like an entire share, because of how the market is right now. So I'm very happy. And yeah, guys, this is the reason that I kind of got less dividend this time around. I made a conscious decision, and I'm okay with it. I'm happy with it. I'm still investing. So it's not like I'm saying totally go buy. Thanks for watching, everyone. Do not hate me for this decision. I made a conscious one, and this is the right path moving forward. Thank you so much. And if you haven't subscribed, please do.